Hello, my name's Charles Lastic. I'm the Managing Director of Blue Bond Tax Planning. I've been an inheritance tax specialist for more than 18 years and have helped hundreds of clients avoid millions of pounds worth of inheritance tax, both in the planning and in the implementation of our advice. So today's video is around family investment companies and why should you use a family investment company instead of a normal limited company for your rental property portfolio? Okay, so today's video is around why you would use a family investment company instead of a normal limited company for your rental portfolio. So your accountant has probably said to you that due to Section 24, especially if you've got mortgages, that you should consider putting your properties into a limited company. Now, hopefully they know what they're doing, and if you were to do that, you would set up a partnership first of all and then incorporate that into a limited company. But we actually believe that those accountants have not thought this through far enough. We believe that family investment companies offer significantly better value than a normal limited company. So if you want to know more detail around that, you should watch our video on why landlords should use a family investment company. But long story short, very simply, it allows you to hold your property portfolio in there, but you can, number one, set up alphabet shares so you can have different distributions of income to different people, which is frowned on in a normal limited company. You can have, like a normal limited company, the same, you can have growth shares in your children's names and not have any growth. So the growth of the property portfolio is outside of your estate. But one thing you can do with a family investment company you can't do with a normal limited company is something called entrenched directorship. So basically, when you set up the company, you change the rules so that you are allowed to be a director for as long as you live, you and your wife if you're married. Now, the benefit of that is you control the assets for as long as you live, and you also control the profits of the company and the income distributions out to whoever. So you can decide whether to give your children income or not. But of course, even though you can still give the shares away to your children, and those shares are a potentially exempt transfer, there's capital gains tax issues and all of that, which we won't go into today. The main point is the benefits are that you could have entrenched directorships and you can have alphabet shares, which two things which are a massive difference to the tax planning side of your family investment company. Also, you can set up, the third thing is that you can stipulate that only your children and grandchildren are allowed to be shareholders. So that means the spouses of those children are not allowed to be shareholders, which means if any of your children go into divorce court, the value of those shares is significantly reduced because nobody else is allowed to use it, and usually your children will be minority shareholding and probably not even directors, so they've got no control. So there's a lot of benefits around a family investment company which are much better than a normal limited company, and to my mind, in any case where a client has got 6 or more properties, that they should consider a family investment company rather than a normal limited company. Okay, hopefully that makes sense. If you found that useful, please give us a thumbs up and a like. That would be appreciated. It helps the channel. But thanks for listening and goodbye for now. Bye.